we started investing in some franchise concepts, right? I invested in a concrete pouring and repair business. That didn't go well. The operator, it never really quite worked out. We shut that business down. I invested in a quick lube oil change concept, bought up a bunch of territories, opened the first two, could not get these things even close to cash flow positive to save my life, right? Had to look myself in the mirror and say, you know what, we're going to close this down and move on and do something different. And then we had a few growth focused things, right? Our flooring company, it's a decent sized business. It's about an $8 million business. So it's a good size. We started expanding into other regions. We were Atlanta and Lake Oconee based. We went to Charlotte, right? Thought we had a phenomenal operator. It wasn't the right operator for us, right? Phenomenal guy, didn't fit within our model. And so we had to shut that store down. So, in a year and a half time, there was, for the first time in my business career, all these failures, right? It's obviously not enjoyable to have that, but to me, I think it's such an important thing to be humbled and to have some of these licks on the chin, because it makes you so much smarter going forward, right? I'd rather do it now where the mistakes were kind of, this big, small, so to speak, than 10 years from now when the mistakes will be much bigger. And so, we're on the back end of that, but it's been an interesting couple of years.
So the quick lube, I get that's sort of, it sounds out of bounds from an integration standpoint. It sounds like, oh, hey, that's a great opportunity and all of that. The concrete business, I could see there being, well, maybe this was the issue. I could see there being connection to that being vertically integrated, but was the issue with these businesses that they were too far away from really being integrated or not integrated at all? Is that what the issue was? Or was it the operator? Like you said, was there a trend, or was it just sort of one-offs for each of these businesses that didn't go well for you?
I think it was a couple of things. One, we were kind of getting a little too thin and spread, right? And so there was a distraction issue. I've only got so many hours in the day to focus and prioritize and strategize, right? And that's important. Two, both of these concepts really require owner operators, right? So I'll take the concrete example. We were going out there, we hired a general manager, we hired subs and crews, and we were trying to lay big driveways. We were trying to get into foundation work. We were trying to do big repairs, extensions, additions. The model was for someone to come in, be an owner operator, and do simple crack and joint repair, right? Like, oh, wow. I'm talking $700 projects that have the $100 cost, right? And just crank those out all week. If I were just going out and doing that, the business would have made a bunch of money, but that's not what we were set up to do. That's not what we were interested in doing. We wanted to have someone operating it. So I would say those were the biggest mistakes. With the oil lube thing, the economy was interesting, right? It's labor's getting so expensive. When we went back and looked at the financial documents of this, going back using the data I had, I would have probably done the same thing over again, right? Which is the head scratcher there. We couldn't hit the labor numbers, right? You needed $13, $14 an hour guys. We couldn't get quality talent that wasn't $18 an hour, right? That $5 delta alone per hour per guy kills the model. And then those places take a while to get up and ramped up, and then you're competing against the gorilla that is Take 5, right? They've got more marketing spend. They're backed by driven brands. They crush everyone in every market. So we just got out of our lane a little bit and learned a good lesson.
How was the quick loop sunset? Were you able to sell the territories to somebody else, or was it just a write-off?
That's actually still a work in progress. So we've taken the 2 stores that were up and running and handed it off to someone at the corporate site who actually knows how to run them well. And to be honest with you, they're probably going to take them and make them profitable, right? They know it. They've been doing it their whole career. They know how to be nitty gritty. They're willing to get in there and actually change oil. So I think they'll be successful. I hope they're going to be successful. We bought 10 total territories, right? So we have 8 that we're kind of sitting on right now. TBD on what we end up doing with them. It's not lost me. There could be a partnership with the corporate store and the guy who's running the 2 there. I don't think I want to be distracted by it again, though. So I think I might let those pass.
Do you think that you paid at market, above market? So in other words, if you were to sell them to somebody else, do you think you could recoup most, if not all, of your investment?
No, not all. And I have still a discount for sure, because they could go out to the open market, and the way the franchise world works, there's brokers that work, the corporate site gets revenue from selling territories. So for me to be selling territories, it would kind of cut out some of the people that are supposed to be making money in that business. So it would make it a little more challenging. But it's on the to-do list to figure out a solution for that. It's just we're working through the 2 current stores first to see how that goes.
I'm so curious with the franchise model, because there's some guys who have done amazingly well. I don't know if you know Brian Beers. He's incredible in the franchise. He's like 35 Midas stores or whatever. And he gets into the nitty gritty and the weeds of that. And then I met this guy. He was actually at an event a few years ago. I can't remember his name right now, but he wrote a book called Hillbilly something. Hillbilly. I can't remember the name of the book, but anyway, $500 million guy, right?
Yeah.
And he bought up a bunch of Orange Theory franchises, opened a whole bunch in Dallas, sold them all, but kept the franchise, kept the rights to the franchise in those markets, sold them all like end of 2019, like right before everything kind of went crazy, like perfect timing, but kept the rights. So when now Orange Theory came back after COVID, he was getting royalties from owning that territory. So is that a possibility for you? Maybe you said that and I didn't quite understand, but is like if corporate goes into that territory because you own it and they decide to put a store up there, do you get maybe a passive income stream just simply by owning that territory?
No, I don't think it's going to work that way. I mean, the franchise rights will expire.
They expire. You don't own them forever when you buy them.
Based if we don't open them or take action on them, right? Because of the way that we structured it. So, and I'll go back. I mean, they've got a good business model, right? The guy who founded it, I'm not going to say what the concept is. I feel like that would be disparaging them, but brilliant founder. They've got great operations folks in there. They run a good shop. It just wasn't for our model, right? And so I don't have anything negative to say about franchising. I think that there's a lot of good in it, right? It starts you off on second, maybe even third base when you're opening a business. One thing I will say is we kind of came into some emerging brands. Next time, if I ever do it, I would go to I would go to something that is like an Orange Theory where there's Midas, where there's name recognition. You go ahead and you put an Orange Theory in the corner or a Midas, and like when people know it, they trust it. They know, it's a good brand, and then they come, right? I would love to have a Chick-fil-A in my portfolio, right? Like those things have lines up the door, day one. So
we got a guy in Delaware, Kevin Wood. He owns a Chick-fil-A. He's a GoBundance guy, so maybe somebody to reach out to.
He's probably loving it.
He does done well. He's had to build out like extra drive-through lanes and all this stuff. I mean, it's Chick-fil-A. You ever see there's this great meme, I'll have to send it to you, not meme, but like reel on Instagram of like a Chick-fil-A drug dealer on Sunday, like standing outside of the Chick-fil-A because it's closed, and this lady pulls up like scratching like she's a crack, she's on crack, and he's got the Chick-fil-A under his I
love it.
I know exactly what that's like oh, there's a Chick-fil-A, oh, it's Sunday. I hate that feeling.
We've all had that moment. I've been in the drive-thru before and we're like, what am I doing here right now? It is Sunday. Like, onward I go. I want a chicken biscuit so bad, but
so bad.
I guess it's McDonald's.
We don't have them in the DR. Maybe I have to do that. Bring one down here. Although it's a little weird with the politics down here. So anyway, interesting that you said about the franchise model. And what I heard was this: when you had your jobs, you were jumping job to job. It was the job. And then you realized it wasn't the job. It was you. Now you go into these franchises and you go into the concrete business and everything else, and you defaulted to what you learned then. Like, well, it's not the franchise, it's me. Yeah. How do you, if at all, kind of govern that going forward? Is it something that's front of mind for you as you take on other opportunities like NexusPoint or whatever? How do you stay front of mind on whether or not this is aligned with who you are and where you should be spending your time and what you should be doing, and make sure that you have success? I don't know if that question makes sense, but I feel like there's an evolution that you went through. How do you continue to evolve? Yeah,
and there's a lot to unpack there. So forgive me if I missed the mark a bit, but I think it starts, you just got to be kind of honest with yourself, right? Like the minute you're able to kind of put your ego aside and really be honest about what you're good at, what you're not good at, that's step one, in my opinion, right? And joining a group like GoBundance, for example, is a classic example of this, right? A place where you can come in, learn from others if you're truly, there to open your ears, open your mind, be vulnerable, right? Take advice from people who have been there and done that. That kind of thing helps a lot as well. I'm still so early in my business venture, right? I'm 34 years old. I hope to be doing business for another 50 years. I'm going to have more misses, right? You swing the bat, you're going to strike out sometimes. And, you want to do your best to kind of minimize that. So with each successful venture, with each failure, with each good connection, meeting guys like you, people in the group, business partners outside of GoBundance, you just learn, you try and retain it. And then you just try and be smarter for the next one, right? So to me, it's a little more of an art than it is a science, right? There's no like, hey, you look at point 1, 2, 3, or A, B, and C. It's just kind of being reflective, slowing down a little bit. But you still got to swing. So it'll happen.
Right now, what is your, if any, what is your wife's role in your businesses, or does she have her own thing going on, or the kids, or whatever? What's the role there?
Yeah, so she has a W-2 job. She works for PricewaterhouseCoopers, PwC. She does the really smart, like project risk consulting, right? So people are implementing some big software, it's going wrong. She comes in and saves the day. She loves it. She thrives on it. She's really good at it. And obviously, we both have our hands full with the two young kids. So she is more of a sounding board for me, right? She wants to hear about the successes. She wants to talk to the failures. She thinks of things very differently than me, and she's not in the day-to-day. So it's actually good. So when I'm kind of emotionally charged, either good or bad, she's good at helping me kind of step back a little bit because she's not in the weeds. She didn't just get off the call or experience this. And so having that kind of perspective that is both different for me and a little distance is actually pretty good.
Yeah. Does she have any thoughts on the oil business or the concrete business, or does she ever kind of, like, I'm wondering, like, in hindsight now, was she like, I think this is kind of far afield, or did she not really have an opinion on it?
No, I think, in hindsight, we're both like, that stinks, right? She was glad when I decided to get out, right? Because there was a period there for 3 or 4 months where the writing was kind of on the wall, but we're like, we're going to give it the old college try for a couple more months and increase marketing here, try this, try that, change the staffing model, lean in a little bit. And when we finally said, okay, these things aren't moving the needle a lot, I'm going to jump out and call a loss and enjoy my tax write-off. She's like, yeah, good move. Thanks, Dave. Appreciate it. Yes, exactly. So I'll be happy come tax time when I have a lower tax liability here in October.
There you go. There you go. I know it's coming up.
Next year,
I got to finish off mine here soon. So thanks for the reminder. God, you just gave me stress. I forgot about the tax thing.
I have a reminder for that, like, every Monday, and it keeps getting moved and moved. And I moved it to next Monday, and it's going to get moved again. It's like, I think
you, me, and 900 other guys in GoBundance do the exact same thing. I've learned that in my pod. Like, I always felt like a piece of shit. Like, oh my God, guys, I haven't done my taxes. They're like, yeah, dude, I still have to do mine. Like, it's going to be right down to the wire. Our CPAs must. There's just when you do what I think most guys in GoBundance do, and that is, we start shiny, we go do a whole bunch of things, and that creates a whole bunch of different complexities and K1s and this and the other. It's not like I remember my W-2 was easy. Here's my W-2, right? Like, hand it in.
Mortgage deduction. Yeah.
That's it. Standard deduction, mortgage deduction. And that was pretty much it. That you were pretty much walking away. Now, it's funny. People say, oh, open an LLC. In my mind now, when that happens, it's like, I'm just thinking of the back end. That's another filed return that I have to think about or worry about or pay for or whatever it might be. So, it's insane. God, you make me stressed out now. Thanks.
Don't stress. I use Google Sheets. I have this little checklist. Done or not done. It helps kind of clear the mind a little bit. So
I'll have to do that. Do that. I've toyed with hiring a bookkeeper, just truly like take over all of it. We have one for like one of our businesses, but actually for 2 of them, but not for everything that I do. And I've thought about that, but I don't know.
It's helpful.
We'll see what happens.
Yeah.
Thanks for tuning in. If you want to hear this entire episode, the audio links are down below. But if you want to see another episode that we think you would enjoy on this channel, click right here.